Hello everyone, welcome back. This is Nikhil here, and today I want to discuss with you about mutual funds and exactly how mutual funds work. Now, one of the major reasons for this particular topic is purely because a lot of people they recommend you to invest in mutual funds, but all of us we make the same mistake. The very first thing that we look is at 2 to 3 years return. If it's around 16% or 20%, a lot of us we blindly invest into that particular fund house itself. Even I have made the same mistake. So it's something which is very common. So in today's video, I want to take you through what exactly mutual funds are and what are the basic things that you should know before investing in them. Now, I want everyone out there to be successful, and that's the goal of this channel, to actually provide a financial knowledge to today's youth, which schools and colleges don't provide. So if it's the very first time here in this particular channel and you want to learn more about investing and tips to grow your wealth in your 20s, particularly in India itself, start now by subscribing so you don't miss anything out. So with that said, let's get into it. Now, before jumping into mutual funds, I want you to understand the basic concept. Now, to invest into the share market or the stock market, there are three ways. You either do your own research, understand how the stock market works, and then invest yourself. In this case, you're buying and selling the stocks yourself. The advantage over here is that you're not dependent on anyone, neither you're giving your money to anyone. Negative side is that it is time consuming. You need to understand how the stock market works and you need to understand quite a lot of patterns. You need to do your own research around the company. Second way is that you hire a broker who advises you from time to time on which share to buy and when to buy, and he charges a fee for it. And the third way is your mutual fund. So there are these fund houses. What they do is they'll collect money from different people. Now it creates a pool of money and then it will invest this money into different opportunities. They can invest into equity like stocks, they can invest into debt. Wherever they see an opportunity to grow that money, they will invest into that particular opportunity. Now every fund house will have a fund house manager. This person takes the decision in terms of where to invest. Now, this person will have years of experience. This solves half of your headache because you might not understand how the stock market actually works. And this way, you can rely on someone else who actually has more experience and knowledge as compared to you. People think mutual fund is only meant for investing into the share market or stock market, but that's not true. Through mutual funds, you can even invest into gold or real estate as well. Now, there are various different types of mutual funds. But if you want to keep it very simple, it can be divided into three different types. Equity mutual fund. Now, these are the funds where the fund house invests into equity or the stocks. They're considered to be high risk, but they have the potential of high return as well. You should invest into equity mutual fund only if you have a long-term goal. If you have a short goal, like maybe with 8 months or maybe 1 year, then stay away from these funds, as these funds are highly volatile and might not give you the best result in such a short span. Second would be a debt mutual fund. Now, these are those fund houses where they invest into various debt instruments. So the risk involved over here is quite less. Now, these type of investments can be certificate of deposits, your government bonds, your commercial papers, treasury bills. They're generally considered as low risk and they offer low return as well. These are most suitable if you have a short-term goal and your investment period is, let's say, about 1 year or 2 years. Last would be a hybrid mutual fund. Now, these are those kind of funds where the fund house invests into both equity and debt. Their intent is to give you moderate risk with moderate return. Some people want to invest into stock market or they want to invest into equity, but they don't want to invest the entire amount. So they choose your hybrid mutual funds. Now, these fund houses, they will not be doing this for free. They will be charging you a certain amount of money. And this is something which a lot of youngsters, they don't know. Each fund house charges an annual fee. This is the cost involved for managing that fund. If you see the websites, you come across this term called expense ratio. So this is the fee which the fund house charges, and this is your expense ratio. It covers all kinds of your management fee that your fund house requires to perform in their day-to-day operations. In India, most fund houses charges anywhere between 1% to 2.5% of your total investment amount as your expense ratio. The biggest advantage of a mutual fund is that it is affordable. You can start investing in mutual funds with just 500 rupees. This is the bare minimum which you must invest and there is no maximum limit. Second biggest advantage is that since there will be an experienced fund manager who manages your portfolio, you have someone to rely on. It lowers your headache if you don't exactly understand how the stock market works. Another big advantage is that you're not investing only in one place. Mutual funds diversifies your portfolio. So if a particular segment crashes tomorrow, not necessarily the entire fund will crash. So that reduces your overall risk by a small margin. Now, mutual funds are regulated by SEBI, which is your Security and Exchange Board of India. So a fund house running away with your money is highly unlikely, and it's something which you don't really have to worry about. Also, mutual funds have this option called SIP, which is a systematic investment plan. By using this, you can actually invest in a small fixed amount on a weekly, monthly, or a quarterly basis, depending on your finances. So with that said, you guys, thank you for watching this video. I really appreciate it. If you did gain some sort of knowledge from this video, then definitely do hit the like button and make sure that you subscribe as well if you haven't already. I would really appreciate all the support. Also, if there's any particular questions regarding this topic, feel free to drop them in the comment section below or drop me a message on my Instagram and I'll try to get back to you as soon as possible. So with that said, see you all next time.